What's going on, guys? Welcome back to the channel. Today I'm going to talk about a few stocks to buy during this coming recession, or the recession's already here, which is technically true, and I think it just might get a little worse before it gets better. So I'm going to talk about a few stocks you should look at over the next coming months to start maybe, getting some shares in if you believe that the market's going to turn around and not just completely collapse. I believe that we might see a little bit more pain, maybe 20-30% down from where we currently are at most, but I also think that we're going to see a huge buying opportunity after that, after those levels are hit. So if you watch the video I put out just before this talking about how I think, where I think the recession's going, and if I think we're going to have a really bad recession, you'll see where I think the perfect opportunities are going to be in this the next coming months. But in this video, I'm going to talk about specifically the 3 stocks that you should watch right now, and then you should watch over the next few months to kind of understand that these are probably going to be really good companies to rebound very strongly. And I've already made money in some of them, trading them from bounces from levels that I really like, but then selling once I saw the market just turn around violently. So this is going to be kind of the overall idea. The video that I put out before this talking about where I think these levels are going to be is going to be a lot more in depth of where I think you should look to buy these, but this video is just going to be talking about what these stocks are and why you should watch them over the next few months. So just brief, like I said in the last video I was talking about, just look at these levels, look at these kind of bottoms. When you look at the bottoms of both the collapse in 2020 and both these kind of pullbacks right here, right? 250 has been that level of support, and if you look at Michael Burry, he says that he thinks the markets are probably going to go back down to that kind of level, and that is possible, right? So that would be a much bigger collapse than I'm predicting, 40, 30, 40%, or at least the worst case scenario. I'm predicting probably more into this level here, this 320 and maybe 300 as your bottom, and then you want to start to buy, start buying around 325, and then towards 300 you want to fully load up for a nice rally move back up into 380. And you'll see, I'll explain in the last video why that's going to happen, but that's going to be just a quick idea of why you should look at these and where you should maybe look to buy in the overall market. And these are the stocks you should kind of look to pick up over the next few months. So the first stock here, and this is just the easiest one, this is the most simple, Warren Buffett type play. This is a dividend play. This is not a play you want to put $500 in or a couple $100s in. This is the kind of stock you want to put 10, 20,000 in, that you're looking to just hold for the next few years. Because what you got to understand is that Coca-Cola is a company that very, very much has no issues with making money, because they rely on products that are very cheaply made. They're cheaply sourced. They can kind of find replacements for them. You could always find another artificial sweetener or something to make your Coke Max or Coke Zero or whatever, right? So there's so many different, and they have their hands, because they're such a big company now. They own so many different avenues, from food to like stores to restaurants to everything, right? And they're in every restaurant. You go to every movie theater, every restaurant, you're gonna get a soft drink. Even most grocery stores, most convenience stores, most gas stations, you can go into and just load up a can of Coke or brisk iced tea or whatever, and all these that are owned by Coke, right? So this company is just so ubiquitous. It's so universal, because it is in every country around the world. You'll find Coke in every country around the world. Well, most of them. I shouldn't say every, but probably 80 to 90% of the countries you'll find Coke, or at least you can get Coke. They might not sell it, legally, but you could probably get it. Anyway, so this is a dividend play. Like I said, you're not going to expect huge rallies, although, if you bought it at the 2020 low, that's a decent rally from there, right? But you're not going to see huge rallies in the stock, and the stock's not going to go down huge, right? It's going to stay relatively flat. It's going to stay relatively kind of as a growth stock, and it probably will go up in the long term. But you just don't expect huge growth levels from these stocks, right? And obviously see from 2000s, yeah, we've gone up quite a bit, right? But when we look at the overall kind of growth of this stock, we see that it's just slowly kind of gone up over time. And so in the next 10 years, we should easily see this thing towards 100. Plus, if you're getting dividends, this is why you want to put lots of money in, because then you get paid dividends. I think something like 2.83% dividend or something, which is very nice if you have 20, 30,000 in this kind of stock. So that's the first stock. Like I said, it's a dividend play. It's not an overall play like, hey, I'm going to get into this for the next, 5 years with like $500. No, you want to put a lot of money in, and you want to be able to, make money from that. So the second play, and this is the one that I'm kind of the biggest on. This is the one that I think has the most potential, and it's because of the fact that it is not just a low cost stock. It's a stock that's gone down a lot from its top, right? So when you look at the overall chart, right, we have this thing up at like $30 basically, right? You have a fall from $30 all the way down to where it's at now, which is like around the 350 mark. And I was buying at 350 a few weeks ago, basically when it had hit this low here, and then you had this bounce up. I know this chart's kind of being annoying because it has all this volume. It has the volume on the bottom, and it's not switching to what I'm asking it to do. But anyway, so when it had this dip here towards 350, I was buying it at 350 here, and I sold it into this pop in the 390s and $4. So that was kind of my play on Oatly, just knowing that this is a really good stock because it has so much growth potential, but also it's such a growing industry, right? You look at oat milk, and oat milk is just one of the largest growing industries, and I've tried it myself and I actually really like it. And when you start to understand the problems with actual like cow milk and with pasteurized milk particularly, you'll start to see that there's a lot of people starting to move towards this, and this is a $1 trillion industry. And if you have even 20, 30, 40% of those people that were buying milk switch to oat milk, and even my mom, who's like drink milk her whole life, is now drinking oat milk. So, and she's not giving up milk fully, but she's still replacing that with 50% oat milk, which is still this is trillions of dollars we're talking. So if oat milk can even start to get those numbers, which it is, and someone like Oatly, who a lot of people, the reason why they hate them is because they couldn't expand as quickly into the US as they wanted, and now they're having a lot of competition in the US, so their sales are not as big in the US as they want. But this is the largest oat milk manufacturer in Europe. They have been in Europe for over 20 years, almost 30 years. They've been doing this for a long time, and they've been successful doing this for a long time. They're from Sweden, so they have a lot of infrastructure in these countries. So it's the fact that this is not we all think of North America as being the end all be all, but it's really not. And a lot of these companies are just undervalued because of the fact of their that their industries are not seen as huge growth markets right now because of the recession and all these things, because these are seen as like growth companies that will be huge in a few years, or once oat milk becomes the bee's knees, which it is. You're going to see these prices skyrocket. So even just the valuations from where we are down at $30 to where we are now, right, it is enough to make you say, hey, this stock has potential, right? Like this stock has quite potential, right? $30 down to $3. So let's see. But I think that over the coming months, like I was saying, we're going to see this thing rally. Now, the price that I want to say, and that's why I say you want to give it a few weeks to months, because I think we are going to see lower prices, but $3 and $2.85. When we look at these last few dips and what we've seen $2.85 be kind of the holding level. So down here we saw $2.85 as the holding level, and I think we might see $2.50 if things get really bad. But if we see anywhere close to $2.50 or $2 on this stock, I'm going to be loading up the boat. Anything below $2.50 is going to be a huge buy for me, and I think for the next 10 years, this is going to be a really big money maker, and it's going to be something that a lot of people are going to get on board with once the market starts to turn around, and once we start to see growth stocks become more appealing again. This is the kind of company that's going to explode. And you see every time we kind of get a rally, every time it's like, okay, maybe it's over, you get these huge buyers coming in, huge buyers, right? So I'm waiting to see that continue, and I think that Oatly is a good stock. So yeah, Oatly. And last but not least, and this one is a more utility play, but it's a growth, what I would call a growth utility play, in the sense that this is a company that has a lot of potential for growth, but it also has a lot of potential for stability. And so Qualcomm is a large telecommunications provider in the United States. They do many things. I'm not going to try and get into all of them because I don't understand them, to be honest with you, 1,000%. But I do understand they're a massive company, and they provide telecommunication services to millions and millions of people in the United States. And they also provide things like phone services and like internet things, but they also provide things like chip manufacturers. They manufacture chips, and so they are a big tech innovator, and they're one of those ones that's kind of I would say competitor to like Nvidia, but not, because they also provide infrastructure. So they have a lot of versatility. So that's why I like Qualcomm, and I'm not going to say I try and fully understand their business, but I do understand when I look at financials and I look at their overall kind of growth perspectives. This is a big company, and they're growing. They have been growing for a long time. And this huge rally we had, a lot of it came within a few months, right? And this is right at the top of the bubble, but it's also because Qualcomm was having huge ability to produce microchips and different things that we were lacking. So they are like I said, one of those companies that if these things start to turn around, if tech starts to turn around and all these things start to jump again, this is one of those companies that's going to explode, right? It's one of those growth companies that as growth gets hammered, this is going to get hammered, and I said we're going to see lower prices, right? So when we look at this chart, we can see over the last few years we've had some nice consolidation levels. Back in the 2020 dip, we were down to $60 and we ran up to $175. That's a huge rally, right? In just 2 years. So don't expect when you see these massive dips, this is why, right? It's because it's going up so much, it's going to have these pullbacks, right? And I don't think this pullback's done yet, although this is a nice level to buy at and hold 125. I think if 125 can hold, or like 120, it's a good level to maybe trade off of, but I don't think it's a good level to build a long-term hold off of, because I think in the next few months we're going to see lower prices. And the lower prices we're going to see are around this $90 to $100. I think we're going to hit this level. If we don't hit that level, then definitely 115, right, and 110. And those are, I want to get in at 110, and then I want to start loading it at 100 if we can't hold 120. And definitely like towards that 85 level, I think Qualcomm is a really good buy. Is no-brainer. Gets under 100, it's buy every share you can get, right? And that's going to be it for this video, guys. Sorry if I didn't get into a little more depth in these companies, but like I said, you got to do your own research. I'm just kind of that guy that says, hey, look at these. These are interesting. And if they do what I think they might do in the next few months, then we could. And that's why I like to bring you things that not everybody's talking about. Maybe they're talking about them, but they're not talking about them in the same way, or giving you these big picture ideas, right? So a lot of people might say, oh, this company's interesting, but they don't explain to you what to try and do over the next few months to really be successful, right? And maybe what to be cautious about, because you really have to be cautious with all of these stocks, because they do follow the overall market almost to a T. But when the overall market starts to go up, these stocks are going to rally, and that's what you want, right? You want to be in those stocks that are going to get huge bumps. So anyway, thanks for watching, guys. Have a great day, and hopefully I'll see you again for another video.